Hey, this is Tim, licensed loan officer. On this video, we're going to talk about why you did not get approved for a mortgage. Thank you so much for watching. And what this channel is about, it's all about helping first-time home buyers, helping investors, credit, budgeting, and all things related with financing. If you like those kind of topics, consider subscribing to this channel. Now, this video is going to be about why you did not get approved for a mortgage. And just so you know, this video is not to put you down or discourage you. You're probably wondering why. And I'm going to tell you why. I've been a loan officer for over 4 years now, and I talk to homeowners every day, and I help a lot of first-time home buyers and current homeowners refinance, buy homes, buy investment homes, and things like that. I'm going to go over some common reasons of why you maybe have not got approved and give you some tips and solutions and a plan to help you be successful where you can buy a home the second time around. So with that said, let's get into the presentation. Okay, so why you did not get approved for a mortgage. Now, I want to explain what this means in the mortgage world. So in the mortgage world, whenever someone does not get approved, we call this an adverse action. And this is important. The reason I'm going over this so you know your rights. So a lender is required to provide you with an adverse action notice in writing or electronically, within 30 days of the decision. So within 30 days, you should get a letter or an email or maybe a phone call. Ideally, by law, they're supposed to email you or send you a letter within 30 days. Now, the notice must explain the reasons for the adverse action and inform the borrower their right to receive a copy of your credit report. So you do have the right to receive a copy of your credit report, and you have the right to receive your adverse action. So you will get that, okay? Now, you don't have to wait for your adverse action letter. Now, a lot of lenders, unfortunately, do not like giving bad news. I know it. Bro. They don't want to call you and tell you you're not approved. It's just not their favorite conversation, but they should. But in the mortgage world, unfortunately, there's a lot of people that just don't do the right thing, where they don't call or tell you, and you're just wondering, what's going on? I didn't hear anything. So you don't have to wait for your adverse action. What I recommend you do is contact the loan officer that helped you or the loan processor or the company you apply for. Just give them a call and ask them what's going on. Now, sometimes it could be something small or it could be something big. You really don't know. But the first thing I would do is just contact them. Give them a call and say, hey, I filled out an application or I did this and that. I haven't heard anything, and find out what's going on, okay? Now, I want to go over some of the most common reasons why people do not get approved for a mortgage, okay? This is important. So some of the common reasons is, number one, the credit score could be a reason. And not just the credit score, it could be maybe debt to income. So sometimes you have a little too much debt. It could be your down payment or assets, or it can be your employment history. So maybe your employment history or your income. These are the most common reasons why people don't get approved, but it could be a few other things. But these are the main ones, either the credit score or the debt to income, or the down payment, or maybe you don't make enough or don't have 2 years of work history. Now, depending on what it is, sometimes I recommend you apply with a different lender, because a lot of times people get told no by one lender and they get discouraged and they don't apply. Sometimes it's good to have one other lender take a look and make sure. I have seen where under my guidelines with my company, we were unable to get someone approved, but we referred them to another lender and they were able to get them approved, and vice versa. Someone have said, hey, Tim, take a look at this. You might have something here, and I was able to make it work. So depending on what it is, sometimes you want to have a second lender look at it and have a second lender take a look at everything, go ahead and apply, submit the same documents, and see what they say, okay? Now, I want to give you some advice on helping you achieve this. Now, I'm going to put the links down below. So all these have links in description, okay? So number one, I recommend you do is take a home buyer course. So that's in the link below. A home buyer course is just going to let you know the ins and outs, the mortgage terms, everything like that. It's free, it's self-paced, it's online. So I recommend you take that home buyer course, okay? Now, another thing down here is a affordability calculator, and that's down below. And what a affordability calculator is, you just put in your income and it gives you a rough estimate of what you can afford, okay? And then also I put on the link below the debt to income calculator. So you basically just put in your minimum payments, like the amounts in your income, and it'll let you know your debt to income. Debt to income is very important when you're buying a home. Lenders want to make sure you have enough money to afford your mortgage payment and your other obligations. And then also, I didn't put this below, but I want you to go on Zillow and view some homes within your city or area. So after you take the home buyer course and after you do step 2 and know the affordability calculator and you check your debt to income, see if there's any home within your price range in your city or town. And you can just do that on Zillow. You literally just put in a zip code, look at some homes, click on some homes, and get an idea. This is all stuff you can do by yourself. It won't take you very long at all. Now, here are some tips to help you prepare for home ownership. Now, remember, buying a home is a big purchase. It's probably going to be the biggest purchase that you make in your lifetime. So it's something that you want to take your time. You don't want to rush. You want to start early. When I say early, maybe 6 months, maybe 90 days. You do not want to do this like within 30 days. There's a lot of rush and it can be very stressful for you. And what I recommend you do is, just kind of consider, is renting or buying better for you? Just look at both. Consider all your options. I know you may want to buy, but just double check and double check if, which one's best for you. Sometimes it can be best to rent for a year and then buy later. So if you're working on your credit, you rent for a year, you fix your credit. You're saving for a down payment, you rent for a year, save your down payment. So whatever it is, you can always do it in the future. I always tell people it's just not right now. Also, do a budget. Sometimes it's good just to do a quick budget. See what type of mortgage payment you can afford or what kind of mortgage payment you want, and then see if there's homes in your market that fit within your budget. Also, you always want to work on the credit. The higher your credit is, the lower your interest rate will be, which would be a lower payment, save you on interest on the back end, help you pay off the home a little bit quicker. And then lastly, here's your assets. Always make sure you have enough money for at least 3.5% down, like for a first-time home buyer, and then plus your closing costs. And I usually budget maybe 2 to 3% for closing costs. Closing costs is title work, the lender costs, maybe your taxes and insurance, all that good stuff wrapped in. And then last, I want to read this for you here. It's the American dream of owning a home. So the American dream of owning a home continues to inspire generation after generation. It represents control, comfort, safety, status, and the opportunity to build wealth over time. Homeownership is a broad goal that requires the completion of several narrow goals such as income building, debt management, credit improvement, and savings. It is a wonderful goal for clients to embrace. Even if you unlimitedly don't buy a home, that is, they will have built new capabilities in budgeting, debt, credit, savings that will help you achieve many other important goals. So what this says here is that buying a home has always been an American dream. It's something a lot of people want to buy. But buying a home is breaking down smaller steps. So in order to buy a home, you need to, improve your credit or have good credit. You need to make sure you manage your debt and not have too much debt. Make sure that you have savings for your down payment. And even if you don't buy a home, you still want good credit. You still want savings. You still don't want too much debt. So I always tell people, make the goal to buy a home and work on those things, which would be income right here, debt, credit, and savings. So worst case, you have money, low debt, and higher income. Thank you so much for watching. I hope I helped you understand why you maybe did not get approved. Now, there's so many different situations and different things. There's no same application. Every situation is different. So you can always email me or leave me a comment below with your specific situation, and I'll try to answer it and give you my best advice. But remember, do not get discouraged. A lot of people get discouraged. Keep trying. You will buy a home one day. It just may have to work on something, or maybe just go to a different lender. So let me know if you have any questions, and I would love to help you. Now remember, if you found value and you like this video, please consider subscribing, okay? And I'll see you again on the next video. Thanks so much for watching. Thanks.